All right, Quasar Markets Live. You already know this is all about. I've got a really good one today, and a friend, Jeffrey Hirsch, Stock Traders Almanac. For those of you who don't know, I literally live by it, and I do remember I have a signed copy of the Stock Traders Almanac from Jeffrey Hirsch, and we have him here today. Jeff, how are you, man?
I'm good. Sorry, you made me sign the front cover, right?
I made you sign everything. I think I made you sign the front cover and the side. I think you got everything on it.
Awesome.
I think you got pages
That's fun.
as well. I love it. And we were just at the CMT conference and the holiday party in New York City. So very excited about that. But Jeff, I'm going to get your hair. Just talk to me a little bit about yourself, how you got started the Stock Traders Almanac, and we're going to get everybody out there. We have quite a few people actually watching already. We'll be getting a chance to click on the button actually, and I'm going to try to talk you into signing theirs too as well, if you don't mind.
Right.
But let me get your hair. Talk to us a little bit about yourself and how you got started the Stock Traders Almanac.
Well, I mean, I was born, bred, weaned, raised on it. I basically my father started the Almanac back in 1966, the year I was born, and I took over about the year 2000 after working for him for about 20 years. I came in just doing numbers by hand in the old days when I was in middle school and high school. Learned about the whole business from the mailroom up, shipped books out to everybody, and was kind of fighting it, looking to do my own thing and not just take over the family business. And then friends said, "Why don't you go work for your father?" So I did, and then it clicked. We had like a moment where he was explaining something to some of the other analysts in the room, and they didn't get what he was saying, and I did. And I was like, yeah, I understand what Pop's doing now. And the rest is history. So, we've been doing it for 59 years. It's as old as me. We're starting up on the 60th anniversary edition for 2027. And you've got the 59 in your hand. So
I do. And we'll get started off correctly. I'm going to go ahead and post this, Jeff. I'm going to put it out there for everybody. They can actually click on your website, Stock Traders Almanac.
It comes free with all the newsletter subscription. That's kind of what we do. If you want to buy the regular book, you can give us a holler, or just go to Amazon or wherever you get your books. It's everywhere. But for us, it's part of the newsletter service where we track the market seasonal patterns. We update it, for each month. Like, today we're putting out the February Almanac and the vital stats and midterm election year stats for February and our strategy calendar. And, if you just there's a little tab that says Get STA up there at the top. Yep. If you click on that, there'll be a code for saving a couple bucks.
There you go. Get that code out there right there. And we'll put that out there too for you, and there's the code.
And if you already own an almanac, or if you buy one, there's a flyer, like an insert in there that has the same basic deal. But we also pick stocks and ETFs. We have a whole sector seasonality portfolio using ETFs that comes out of the bunch of pages in the book, 94, 6, and 8. And then we use technicals. Obviously, I wouldn't be hanging out with you at the CMT party if I wasn't looking at technicals. So, we combine technicals, fundamentals, sorry for all you technicians, as well as, macro trends. And we run a pretty robust fundamental screen with a technical overlay, a seasonal overlay, and we look for stocks that are off Wall Street's radar. I mean, one of the ones I heard people talking about today was Boot. I know it's off a little bit today, but that's one that I've got in my portfolio that's also in the newsletter one. The big, Yellowstone, Landman, Western vibe out there. Kind of just showed up on our screens. We've also got the January barometer coming up with part of the January indicator trifecta. Everyone was all worried about the Santa Claus rally.
We got it. We got the Santa Claus rally. Just Santa Claus. He's a little tired. He was a little late. He was probably drunk from the weekend.
No, the Santa Claus rally for the S&P was negative for the 7 days. The Dow was positive, but it's really based on the S&P.
Yeah,
we've looked at all of them. I got a new tool in our proprietary software. It's got our January indicator trifecta in there. So the Santa Claus rally, the first 5 days of January barometer, and also the December low, which people have been talking about. Another page in the Almanac. It's page 36 there if you want to look. I know you got your book. So that's something where if the Dow crosses below its December closing low in the first quarter, that's a negative thing. But it all really falls back to the January barometer. When that's up, going back to 49, I got the market up 42 out of 49 years. It's just huge.
Yeah, and when you look at the almanac, and I'm old too, so I remember my parents getting the farmer's almanac, and I look at this and I go, man, like how where do you get the information? How do you pull it out for the next year, and how do you get that stuff going for everybody?
Well, I mean, it all started with the Barron's Lab pages back in the day. I have this little short ruler. I would run through the half-hourly closes for the Dow and underline up ticks and calculate it on an adding machine on graph paper, and then we just put all that. Same thing with the closing prices. That we built a piece of software that queries it. So it used to be by hand years ago. Now we can ask it questions. I mean, my partner just built this trifecta tool to look at it for the Dow and S&P, and we could run the Russell or whatever else through there. So we put the data in there. We cross check it and make sure that it's accurate. Not like some of the fly by night or the random numbers you see.
And then for you out there, you got a little bull for bull days, and you've got bears for bear days. And then what do the numbers mean? The D, tell everybody
that's
what
the
that
Dow, S&P, and NASDAQ probability number for the
Right.
last most recent 21 years. How many times it's been up on that trading day, not that calendar date. That's trading day. I know you saw the New York Stock Exchange news that they're going to go 24/7, 365. It's going to be like crypto. Pretty sure they're going to have to give us a closing price at some point.
We got to have a closing price somewhere, right? Exactly.
So that's one of my contentions with the new world order is, what's the percent change? And people are asking these days, is the Santa Claus rally based from the open to the close? No, it's the close to the close.
Close, always a close, right?
So, I did a little updated a piece in the newsletter, the January Barometer 101. And I start out with, first of all, it's based upon the close of, So
and what's interesting this year of a lot of years is that this is a midterm election year, and you've got the whole midterms out there. What's it like for the years? And I don't want to give it away.
Page 11.
You got it. You actually know the pages by the pages, man. I love it.
Page 10 is the one I want you to look at, actually.
Okay, we're on page 10.
Don't mind the typo.
All right, so there's the 2026 outlook from page 10, right? So we're just talking about. Yeah, right there at the bottom.
So that's the midterm election year pattern. And what we want to see there is the red line is the 6th year of the presidency, the second midterm year. Everyone's upset or concerned, and rightfully so, about the midterm year being the worst year of the 4-year cycle. 22, we had a nice bear market. We had a textbook October midterm year bottom. But the midterm year, the second midterm year, is kind of where the incumbent president cements their legacy, and we're seeing that happen. On many levels here.
Somewhat.
At least the attempt by the current president. May we live in interesting times.
Maybe live in interesting times. Yes.
So that's much more bullish, and that's why our outlook we've upped it to about 8 to 12%. I know there's a lot of bulls out there on the analysis, but that's just the way it looks. And
and you're not just about you're also interesting. There's about options too as well. You've got the whole options list up there. But here's what I was really interested in, and it seems to be quite interesting that you posted this in here. And prosperity more than peace, and that's on page 32. It's about the last 27 midterms and how many seats get lost or added by the president's party. And of course, you've got a long trip here on this one here, all the way to G.W. Bush. And of course, the worst ones and the best ones. And I lived through the Clinton one, which was rough. Bush obviously lost. What are you thinking? Trump did lose some. He lost. The percent of seats he lost was 17.4% in 2018. You think it's that high this year?
Think what's a high number of
the loss of the midterm seats in the Republican Party this year?
I don't know if it's going to be high. It's not something I necessarily try to predict, but it's the battle that creates that weakness in the weak spot in the second and third quarters of the midterm year. With the margins so razor thin in the House, and they've even got slimmer more recently with some of the changes, I think he runs the risk of losing a bunch of seats, and that's going to. And we've seen this president get involved in lower down the ballot politics quite significantly. So my instincts are that as the campaign heats up, he will get more engaged, and that will take attention away from the economic policies and away from the market and focus on the election. And that's what has people, distracted from the market and causes the market to flatten out or go sideways. And probably look for some sort of low point in Q3. Maybe not super low, but it's definitely a high probability he's going to lose a bunch of seats. Most of them do. I mean, everyone's talking about how disappointed, the country and even Republicans who voted for him are with him. Let me tell you something. Every president, it disappoints, and everyone says how disappointed they are in the midterm. That's what creates the 4-year cycle.
That's
the way they can fulfill their promises.
All right, so I'm going to stick to another one, too. One of the cool things about your almanac, too, is it's not just about the daily. It's also about the seasonality. At page 86, you've got I like that. And you've got the ETFs, the stocks up there. I think you've got XNG and XTC, of course, utilities, and XAU. Very popular for gold, obviously, XAU. And I really love that it's a strategy book, too, right? It's not just what's the normals. You always try to talk about it from a more thorough investigation of this thing. Now I'm gonna pull something else up here that I do like. You've literally got the S&P 500 bull and bear runs market since 1929, right? So since you started out, and then 71 on the NASDAQ here since the NASDAQ started, and you pretty much lay it all out in a graph form. Can somebody get this book in a digital format?
There is digital. I think it's meant to be tactile and in your hand.
That's right.
It's slim enough for you to throw in your pocket, kind of in your bag, in your backpack, and next to your laptop, or your iPad or whatever. You can get it digitally. I don't think it translates as well. I know people that do. We had some clients that are overseas that have some mail issues. We give them a link. There's an electronic version. If you really need one, we can get it for you. But it's meant to be written in. It's meant to be that,
There's a reason why There's a reason why, Jeff, because if it's not written, not in paper format, you can't sign it, right? So not only did Jeff sign the outside, but he also signed the front and in the inside too as well. And you have a saying that you write in your book. You want to tell us about what that is?
Well, it's a takeoff on the Santayana quote that those who fail to remember the past are going to have to repeat it. I like to say that those who understand market history are bound to profit from it. So I write profit from history as a little pun, a little tongue-in-cheek comment.
And I'm gonna ask you. I'm gonna say it right now. I mean, those people who sign up and get your book, you're gonna sign up for them. If I tell them the Big Beat sent you.
Sure.
Look at that, folks. He's gonna sign any book
now.
They
gotta take out a newsletter subscription though.
Gotta get that newsletter subscription, and we're gonna give that link out to you guys one more time. I'm gonna show that too. And if you look right here. And he's actually giving you the almanac for free. So, look, that's there's a link there too. I'm going to pull it once again. If you pull that up, you will absolutely be able to click on it. We'll give you a few minutes now to do that as well. And we're also going to pull up Jeff's. There we go. We're going to pull and share the tab here as well of his social media, of which you can now see there You can also click on him. Make sure that you click on that button, following. Of course, I'm following you in all my stuff. And you can also click on the link there too as well. And we know,
back, right?
Yeah, of course. And then you'll notice that Jeff's on all kinds of TV shows. Our friend Gav there over at the Wolf Trading there, and of course all the shows that he's at. And look, he's at the Money Show. He's all everywhere. So. Make sure you're in there with him. There's my friend David Keller from the CMT Association. So you're in good hands with Jeff here, and of course,
see those ticket stubs.
I do. I like that. You Grateful Dead. I've had my opportunity to meet him several times. It looks like Intel just reported earnings and they were terrible. It looks like they're down up here. But Jeff, for all things out there, man, I appreciate you coming to the show. We'll see you again on next time, and thanks a lot, man.
Appreciate you having me, man.